Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, the newly minted government has a plan for housing. Will it work? And the task for growing the economy for everyone. Plus, are we a divided population or do we have more in common than we have differences? That's all ahead. First, for the week that was in business, it's time for the briefs. Canadians elected a new minority Liberal government this week in a vote that was evenly split between the Liberals and Conservative parties nationally. First order of business for Prime Minister Mark Carney will be tackling negotiations with Donald Trump on tariffs. The U.S. economy shrank slightly in the first 3 months of the year before tariffs took full effect as businesses rushed to import ahead of them. Consumer spending rose, but at the weakest pace in almost 2 years there. In Canada, the economy shrank slightly in the month of February, but it is still expected to show modest growth for March.
When you actually dig into what's going on here, what you find is that there were pretty substantial drops in mining and oil and gas activity, and I think you would struggle to connect all that directly to tariff threats, which were in the realm of threats in the month of February, as opposed to the reality that began in March.
Tariffs on auto parts are being modified slightly to appease U.S. car makers, but the new rules are retroactive, meaning tariffs will be paid and then later reimbursed. Separately, the White House said automakers paying tariffs on foreign parts will not be charged tariffs on steel and aluminum. Changes to the tariffs are not enough to keep GM from feeling the pain. The automaker slashed its profit outlook this week by 20%, suggesting possible exposure to tariffs could be worth $4 to $5 billion this year. The revised outlook came just a few days after GM suspended its forecast due to a lack of clarity.
General Motors is going to axe one of 3 shifts at the Oshawa General Assembly plant in the fall.
Delivery company UPS said it will lay off up to 20,000 employees as it moves away from a partnership with Amazon for delivery of its goods to customers. UPS said that while Amazon had come to represent a big chunk of its business, up to 12%, it was not a lucrative one. The Port of Los Angeles could see volumes drop 35% starting next week as tariffs on Chinese goods start to hit supply chains. Activity at ports was actually heightened in past weeks as importers rushed to get ahead of the tariffs. With tariffs in place, a number of U.S. retailers have reportedly stopped shipments altogether. Shipments from China make up about 45% of the business at the port. And those are your business briefs. The newly minted federal government ran on plans to help the housing market, but is it enough to right a market that is structurally imbalanced? Robert Hogue is Assistant Chief Economist at RBC. Robert, great to see you.
Well, great to see you as well.
So, of course, there were promises in the platform of the Liberal Party. There's a difference between a platform and actual bills in Parliament. But still, from what you've heard, are there good plans that might help this market?
Well, I think it's a continuation of what the previous government has put in place, like to favor, the market and housing at large, right? Because a lot of focus over the last, I would say, a couple of years has been to grow the supply. That's something that economists like me for a number of years have been advocating for. Not that there's no need to help the buyers, but certainly as long as we don't correct the lack of or the constraints on building more housing, we're going to continue being in that housing crisis. So a lot of the focus have shifted towards the supply. I think what's on the platform continues in that line as well. But those take a long time to bear fruit. And so we're seeing more completions over the past year. But really, there's still some concern about pre-construction sales where the supply might become again an issue down the road. So what's on the helping out, various ways to help out first-time home buyers buying new homes, for example, does favor new construction. As well as not cutting the GST on first-time home buyers. That should be help as well.
Yeah, and interestingly, of course, again, election campaign, but the focus was very much on that kind of single-family home, that prototypical white picket fence house that people have in their head. If you were trying to solve the problem of roofs over heads, which is a problem we have, affordable roofs over heads, would you focus on multifamily homes, on rental units, on a different part of this? Or are we putting the emphasis in the wrong place, I guess is what I'm asking?
Right, but it's all interconnected, right? And from all the way into the entire housing spectrum is a spectrum. So I think there's a need for pretty much more housing along the entire spectrum, but particularly at more affordable land, but including on the rental space. And this is where some of the programs like through CMHC, for example, we've seen much more attractive programs to incite more developers to get into that space and to build more, and also in towards social housing. In other words, the nonprofit organization building, growing to have the social housing stock, because there's tremendous need on that front.
Mm-hmm. Robert, great to have you with us. Appreciate your time.
Okay, my pleasure.
Robert Hogue is Assistant Chief Economist at RBC. Coming up, how to grow the economy in a way that counts for all Canadians. Stay with us. Welcome back. A new government takes the helm at a time of challenge for the Canadian economy. Here's where things stand by the numbers. Though our economy is expected to eke out growth this year, a consensus view is 1% growth in 2025 and 1.7% next year. It includes a mild recession midway through the year ahead. Fear of trade turmoil will keep business investment down, with a 0.6% decline seen in 2025 and minimal 0.7% gains in 2026. Meanwhile, job losses will push the unemployment rate to 7% mid-year, but economists at TD at least think it will drop to 6.8% by next year. And while inflation may climb slightly, bumping up to 2.8% by next year, it is not expected to run away. Meanwhile, lower rates had been helping the housing market. Most economists think rates will continue to drop by another 0.5 percentage point to 2.25% by year end. And the new government is sitting on a current deficit of $48.3 billion before any new spending or tax cuts are factored in. The feds are currently paying $53.7 billion a year in interest charges on existing debt. That's before deficits add more to the pile. Along with an urgent need to solve our trade problems with the U.S., business leaders are urging Mark Carney to invest in trade diversification and in growth, with an eye on the size of those investments to delay tax cuts for now. Goldie Hyder is president and CEO of the Business Council of Canada. Goldie, thanks for being with us.
Good to be with you.
And that was a strong message that the council sent to the Prime Minister, because he ran on tax cuts. But your message is there's a lot to do, and maybe now isn't the time for that?
Well, I guess we're putting it in the category of must do versus nice to do. I mean, tax cuts should come about when they're affordable. It's critically important that we get that right, particularly at this time where, we just saw today a number of companies have lowered their outlooks. The Americans have fallen, down 0.3% in their GDP last quarter. Who knows what this quarter is going to bring? So it's time to keep your powder dry. But it's also important to first address the problems that we face. Nothing is more important than trying to move forward with resolution on the tariffs. That is only going to come about if we can stabilize our relationship with the United States. I'm encouraged to hear the Prime Minister will be down there. It turns out members of the Business Council will be there next week as well, doing our meeting and interacting with members of Cabinet and others to make the case that the best place to do this is at a table where we are discussing the review and the extension of the USMCA. And we wanted to put the emphasis on that point first, is that's the first thing we need to do before we do anything else.
Right. And of course, what's key there is we will have to renegotiate that. That was always coming in 2026, Goldie. Would it be your preference from the business sector point of view that we actually attack the issues right in front of us, which would be tariffs on autos and auto parts, tariffs on steel and aluminum? How do we roll those back before we start a reopening of a whole big complicated deal?
They're absolutely connected. The tariffs are a cause of a perception of a trade deficit. So we have to deal with that. We know there isn't one, but you still have to deal with that issue because they believe there is one. So the best place to do that is in the process of reviewing and extending the USMCA. And Amanda, this is not just me saying it or my members wishing it. This is what we're hearing from the Americans in Washington, right from the White House to the USTR. The president would like to get Mexico and Canada sort of off the table. Got other things he's worried about. Plus, we've seen signals. You look at the signal on April the 2nd, the so-called Liberation Day. excluded Canada and Mexico for all CUSMA compliant items. We saw just yesterday, they're not going to stack tariffs on top of tariffs for the auto industry.
Right.
These are simple points that validate that they believe in this agreement. So let's not walk away from it. Let's go to the table, review and extend it so that we can deal with both the tariff issue and the trade issue, because you can't be applying tariffs while we're having discussions about how to review and renew our agreement.
And meanwhile, while we do have these tariffs, Goldie, we only have a few seconds, but no to personal income tax cuts is what you're saying right now. But what about support for business as this tariff fight continues?
Well, look, first of all, I don't think we have anything near a COVID-like crisis. Unemployment is holding fairly stable. The dollar's up. It's affecting businesses differently.
Yeah.
Let's see where we're at. We don't want to create more fiscal pressure on the government to increase the deficits and debt. We're already spending all of our GST on interest payments. So let's not unnecessarily add to that. Stabilize the U.S. and diversify and get going with that diversification, particularly getting our resources to other markets.
Goldie, so good to have you with us. Appreciate your time.
Thanks for having me, Amanda.
Goldie Hyder, President and CEO of the Business Council of Canada. Improved prosperity shows up for most Canadians in higher wages and job opportunities. Are we likely to get it with this new minority parliament? Armin Youngzen is an economist and Atkinson Fellow on Future Work. Armin, thanks for being with us.
A pleasure. Thanks for having me.
And it's easy to be distracted by conversations about, growing or shrinking GDP. Most people care about the quality of the work they do and whether they earn enough to have a good living. What's your expectation about where that will fit into a new mandate for this government?
I think it very much depends on the first order of business, which is, are we going to have another cult leader, or are we going to have a cabinet driving the economy and driving the needs of workers today and tomorrow in a world where we have no idea how the global economic order is going to be reshaped? So this government needs actually an all-of-government bench to deal with the job situation and to deal with the trade situation, an inside game and an outside game, if you will.
Yeah. And I know one thing I really want to talk to you about is there's a lot of focus, of course, on resolving the trade issue, maybe getting a new trade deal. There's a lot of talk about resource exploration and diversifying markets. But I mean, I think you're here to say there's a huge chunk of our economy that's service sector driven that should be a focus. How can a government actually prime the pump on that, on the domestic piece of our economy that we do control?
Well, they're already going to do that when it comes to housing, and they're going to do that in a way that is incredibly important. But there's another piece of this before the housing story actually gets put into action, which is we are not recession ready, and the recession is inevitable here and in the United States. 35% of those who are jobless get any form of income support from a social insurance program called EI, employment insurance, that is supposed to be there for you when you lose your job. 35% is the lowest rate of coverage since 1941, when the program was put into place. So getting that actually recession ready is incredibly important. I'm thinking about the aluminum workers, the steel workers, the auto workers that make close to six figures when you factor in overtime. Yeah. And the maximum you can get on EI is $36,000. They're going to lose their homes. They're not going to be able to refinance their mortgages. And people that are being laid off in hospitality, in the service sector that you mentioned before, they can't live on 55% of their wages. So they're going to be losing their housing too. And there's no place cheaper to go to. So housing is really important. Yeah. But you can actually do some prevention here by fixing EI in the first place.
And of course, there's also the notion that we've discovered in COVID that a lot of the folks that we rely on in the care economy are not well paid, to say the least. Are there things that government can do to bolster pay there, which actually, of course, has that virtuous effect of increasing wealth and consumer spending in a whole chunk of our economy?
Yeah, it's amazing that even now, the latest print, the only sector that continued to see growth in employment is the care economy, in particular health-related services. And there we're seeing also the highest level of turnover we have ever seen in that sector because of low wages. People are looking for anything that will pay a little bit better than what they're getting. So we're starting to see the care economy starting to look a little bit more like high turnover sectors like transportation and hospitality. not what you want to see in a sector that requires continuous care. What's the magic sauce for that? Better wages and benefits. Pensions for people that don't have pensions. These are all doable, particularly at scale when the federal government works with the provincial governments to make sure that there are wage grids everywhere, that there's a wage floor, a wage grid, and access to basic benefits like dental and drugs, but also basic benefits like pensions when you do finally retire.
And just briefly, I mean, we, of course, talk a lot about sort of training and, the work of the future. How much are you hearing that sounds right about investing in that part of our economy?
Not hearing too much other than in skilled trades, which is awesome. The Liberals did mention that they would provide up to $15,000 for training in priority areas, which include health and AI. So that I'm glad that they got in because they were the only ones that I identified that we do have priority areas for training people up. But the problem isn't just training, as you pointed out. It's actually keeping the people that you train, and particularly in the fastest growing sector of the economy, which is the care economy, keeping people is hugely related to how you treat them. Caring for the caregivers is going to be a real issue going forward.
Armin, so good to have you. Appreciate your time.
Thank you.
Armin Yalnizan, economist and Atkinson Fellow on Future Work. Coming up, deficits come with a cost that can take generations to pay. That's still ahead. But first, Amazon found itself backtracking in a hurry this week after reports it would display the cost of tariffs on its website so customers would know what the ultimate price would be and why. After an angry rebuke from the White House, the company that Jeff Bezos built tripped over itself to walk back the plan after they got a look at the real cost of transparency. We're back after this. Welcome back. Every dollar of a deficit is a new dollar of debt. That means some future generation winds up paying the cost of current consumption. It's an intergenerational inequity that may have been lost in the shuffle this election. Paul Kershaw is founder of Generation Squeeze. Thanks for being with us, Paul.
Pleasure to be with you.
I say lost in the shuffle because it does feel as though, in general, voters and governments have kind of abandoned the notion of balance, that there shouldn't be a deficit at all. But characterize what it means when we're carrying, if the Liberals follow through, it could be up to $60 billion of deficit this fiscal year. Who pays the price for that?
Well, it's interesting to see that, all parties that were campaigning for our vote this election were proposing that we wouldn't balance the budgets out to 2028, which I believe would mean 20 straight deficits at the federal level. Clearly, this isn't an ideological issue. This is partly a cultural issue. There's not such a commitment right now to say, hey, we need to cover the cost, at least of our operating bills. If the parliament were incurring large deficits because we were doing a lot of capital expenditure to build the housing you were just talking about in the previous segment, to be fighting climate change, that might be the right kind of debt to be taking on. Mm-hmm. But I think what has been missing from the conversation is seeing what's the primary driver of the federal deficit. Over the last 10 years, annual spending on old age security increased from $44 billion to $86 billion in this current year. That's a $42 billion annual increase, and that happens to be exactly what the fall economic statement projected would be the deficit prior to this campaign. And so we need to see that it is a failure to plan decades ago for the aging loved ones in our lives in terms of the healthy retirements that they're looking for. That is driving the deficit. It is also, with an aging population, you have a smaller share of your adult population in the labor market. Right. And that creates an economic drag. That's not the fault of the aging population, but it's something we as a society needed to prepare for. We haven't. And as a result, our economic growth is going to be more modest going forward. No tax cut is going to be able to overstimulate that, overcome that. And we have a large proportion of our investment going to a part of our economy that isn't driving productivity gains. We need to be talking about this more and more.
Yeah, and so interesting that I know you do, and it's an important subject because, of course, elderly people, and this includes, we're not saying that all people who are on OAS, et cetera, are very wealthy and they don't need this money. To your point, they're entitled to it. They put into a system, they're taking out of the system. But some of them don't need it. Some of this money does go to people who we would consider wealthy. But I guess more important, Paul, we might actually see a future generation, say 10, 15 years from now, paying into supporting a system that they will not benefit from. Their OAS will be very small because it just will have to get smaller as time goes on. What do you think happens when people wake up to this fact?
Well, we woke up to the fact partially in the mid-1990s when we knew this was going to be reality for the Canada Pension Plan when boomers retired. And so back then when boomers were still working, we increased the premium by 60%. That's a large increase, but it's why the Canada Pension Plan now is in a strong intergenerational footing. Well, we didn't do it for old age security. And I think we should not describe old age security as people drawing out something that they contributed to. OAS is just a subsidy we pay to those who are entitled today, not at all commensurate with what they necessarily contributed to it. And it's time for us to revisit why a retired couple with $180,000 of income, it still is eligible for an $18,000 annual subsidy from OAS. Right. When we are running large deficits, that level of generosity merits revisiting, especially when the Canada Child Benefit for families with kids is clawed back after a household's income surpasses $79,000. That is a massive age discrepancy, and I think we really need to revisit it as we're wanting to use our tax dollars and whatever deficit spending we're doing to drive productivity gains. An $18,000 subsidy for a retired couple with 180 grand of income is not driving a lot of productivity gains.
So good to have you, Paul, and thank you for making that distinction. It's an important one. Appreciate it.
My pleasure. Have a great day.
Paul Kershaw, founder of Generation Squeeze. Time for the takeaway and the true nature of compromise. Elections can be times of heightened emotion where slogans and simplification take over from complex arguments. It's a time for drawing distinctions and amplifying differences. For voters and party supporters, the aftermath of a hard-fought election can feel jarring. In the sober light of day, a newly elected government governs for all Canadians. And as important, all Canadians have to respect that government. Is that more challenging when the popular vote is as close as it was in this federal election? In a way rarely seen in Canada, the vote split between just two parties, not 3 or 3.5 if we count the regional play of the Bloc Québécois. Because of that near-even split, it may reinforce a notion that Canadians are divided, that polarization has taken hold of the electorate here as it has south of the border. But as always, we Canadians are best served when we think for ourselves and remember we are a unique story. Sure, half the voters didn't get what they wanted. To be fair, the other half didn't either, since few people actually vote for a minority government. It's a reminder that compromise doesn't generally mean everyone gets what they want, but that no one does. But this election produced a government with more popular support than many in the past. It's become typical for the winning team to have a percentage of votes somewhere in the 30s in Canada. And in recent years, the party with the higher percentage popular vote has not always formed the government. One way to look at these results is of a nation hopelessly divided, lining up against each other in two large factions. But as a new minority government gets its feet under it in Ottawa, there's another way to see it, as a perfect reflection of the range of Canadian views. And as such, the minority government should take extra care to represent the views of all voters, even if that means considering elements of a rival party's platform. My takeaway, at a time when Canadians have serious work to do, it's worth reflecting on what unites rather than divides us. And sometimes getting what you want can mean giving some things up. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.